If you're buying a home in the DMV, Northern Virginia, Washington, D.C., or Maryland, you probably have heard someone say there are grants for first-time home buyers. And yes, that is true. There are grants. There are also down payment assistance programs. There are county programs. There are state programs. There's programs for first-time home buyers. There's programs for repeat buyers. There are programs that can help you with your down payment, your closing costs, your interest rate, and even your mortgage insurance. But here's the part nobody seems to explain clearly. Not all assistance is free money. Not all programs are easy to use. Not every buyer is going to qualify. And sometimes the program that sounds the best on paper is not actually the best option for your situation. So in this video, I'm going to break down the down payment assistance that really works in the DMV, why some buyers are successful using it while others miss out, and how to know whether a grant or assistance program is actually going to help you or just adding more fine print to your home purchase. Because at the end of the day, the goal isn't just to find money, the goal is to find the right home with the right strategy. I'm Tim Kelly with The Mortgage Scene, and I help home buyers and homeowners in Northern Virginia, Washington, D.C., Maryland, and the surrounding DMV area make smarter mortgage decisions. And today we're talking about down payment assistance and homebuyer grants. And I want this video to be a little bit different from the usual. Here are 5 grants you should know about video, because lists are helpful, but lists can also be a little misleading. A buyer sees up to $50,000 or $202,000 or 3% down assistance or $6,000 towards closing costs and naturally thinks, great, where do I sign? But mortgage programs don't work like online coupon codes. You can't go under contract and then type in first-time buyer when you do your loan application at checkout and hope the grant funds get applied. I wish it were that easy. I wish I could type in a coupon code for like college tuition or groceries or, my son's snacks. But here we are. With down payment assistance, the details matter. Where are you buying? What's your income? How many people are in the household? Are you a first-time home buyer? What type of loan are you using? Is a lender approved for the program? Does the property qualify? Is the funds still available? Will the seller accept the extra requirements, if there are any? And does the program actually improve your overall numbers? So that's what we're going to unpack in this video. So down payment assistance is money or financing that helps a buyer cover part of the upfront costs of buying a home. That can include the down payment. It can include closing costs. Sometimes it can help reduce the loan amount. It can sometimes help buy down the interest rate. And in some cases, it can help reduce or buy out mortgage insurance. But here's where buyers need to be careful. People say the word grant very loosely. They may say there are grant funds available, but what they really mean, they could be one of several things. It could be a true grant. It could be a forgivable loan. It could be a deferred loan or a second mortgage. It could be a 0% interest rate. It could be a program that gets paid back when you sell or refinance. It could be an assistance that's forgiven over time. Those are not the same thing. And the difference really, really matters. A grant that does not have to be repaid is very different from a second mortgage that has to be paid back later. Both can be helpful, but they are not the same. So the first lesson is this. Do not ask, how much money can I get? Ask, what is the money? How does it work? And what strings are attached? Are these programs hard to find? I mean, yes and no. They are not hard to find because they do not exist. They're hard to find because they're scattered everywhere. I think nationally there's over 2,600 different down payment programs. Locally, we've got a lot of different, county and state options on top of that. So, like in Virginia, you might have Virginia housing programs, county programs, local programs, and federal home loan bank options. In DC, you might have HPAP and other DC specific options. In Maryland, you can have the Maryland Mortgage Program, Montgomery County programs, Prince George's County, Frederick, other city programs, and employer programs, even, and partner match options. And each of these has its own rules. That's why the process feels kind of confusing. A buyer might say, I found a program online, can I use it? And the honest answer is usually, maybe, let's check. Because it's just the program exists. It's just because the program exists does not mean it fits your loan. And just because it fits your loan, it doesn't mean it fits your income. And just because it fits your income doesn't mean it fits the property. Just because it fits the property doesn't mean the funds are still available. The down payment assistance is not a big bucket of money. It's more like a bunch of small buckets. Each bucket has its own label, its own rules, and sometimes someone already drank half the bucket before you got there. So that is not a mortgage technical term. So DMV examples, Virginia, DC, Maryland, and let's talk about the DMV specifically. In Virginia, Virginia Housing has a program that can help eligible buyers with down payment assistance, but those programs are tied to specific Virginia housing loan products that have income and sales price limits. Fairfax County has local housing programs, including assistance options for qualified buyers. Recently, Fairfax County announced a program offering up to $50,000 to qualified first-time buyers, but the funds are limited and reviewed first come, first served. Also, there is a equity share with that program. So a lot to unpack. In Washington, D.C., we have HPAP, and it can provide interest-free assistance to qualified first-time buyers purchasing a primary residence in the district. But again, it depends on income, household size, assets, and other program rules. In Maryland, the Maryland Mortgage Program is a major resource. MMP offers loan products that include down payment assistance, closing cost assistance, tax credits, and other options. For example, some Maryland mortgage program options provide fixed dollar amounts like $6,000. Others may provide assistance based on a percentage of the first mortgage. Maryland also has specific options, including Maryland Smart Buy for buyers with student loan debt, pay off up to $50,000 of student loans. Pretty cool. And then you have county level programs. Montgomery County specifically has a specialty product that can provide significant assistance for eligible buyers purchasing in Montgomery County. Prince George's County has Pathway to Purchase, which may provide down payment and closing cost assistance for eligible first-time home buyers. Frederick County has a home buyer assistance program that can help eligible buyers with down payments and closing costs. And there are more, many more. The point is not that every buyer should memorize every program. The point is that the DMV is one of those markets when it comes to assistance, and buyers in Fairfax, Arlington, DC, Rockville, Silver Spring, Bethesda, Bowie, Upper Marlboro, Frederick, Alexandria may be looking at completely different assistant options. Same general area, but totally different rules. So who can usually use down payment assistance? Most programs are built around some combination of these requirements. Okay. You may need to be a first-time home buyer. You may need to meet income limits. You may need to be buying in a certain location. You may need to use the home as your primary residence, you may need to stay under a sales price limit. You may need to be approved by a lender eligible for that to offer that product. You may need to complete a homebuyer education class, very common, especially if you're a first-time homebuyer. And you may need to use a specific loan type. You may need to contribute some of your own money too, and you may need to keep a certain amount of reserves after closing, and you may need to apply when too you aren't too far in the process. Some of these require you to be approved for the grant before you go under contract. One important note for first-time homebuyers: does not always mean you've never owned a home. Many programs define a first-time homebuyer as someone who has not owned a primary residence in the last 3 years, but that definition can vary. So never assume. Always confirm the rules for the specific program. So why are some buyers successful? Well, the buyer who is successful use down payment assistance usually to do a few things really well. First, they start early, and they're not trying to find a grant after they're already under contract. Second, they get fully reviewed, not a quick one online pre-approval, not a tell me your income and I'll send a pre-approval letter, like a real review. Income, assets, credit, debt, household size, location, loan type, cash to close, monthly payment, and your comfort level. Third, they compare options. They don't just ask what gives me the most assistance. They ask what gives me the best total strategy, and that really matters because sometimes the programs with the biggest assistance amount has a higher interest rate, more restrictions, longer timelines, and maybe repayment rules. Fourth, they work with an agent who understands the plan. The DMV is huge. If your offer needs extra time because of the program approval, your agent needs to know that. If the program has property requirements, your agent needs to know that. If the seller credits interact with the program, your agent needs to know that. If the program requires specific contract language, your agent needs to know that. The lender and the agent need to be on the same page before the offer is written. Because in a competitive market, confusion kills offers. Preparation wins. So why are some buyers missing out? Buyers usually miss out for 6 reasons. Number one, they make too much money. This happens a lot in the DMV. Buyers feel stretched because home prices are high, but they may still be over the income limit for certain programs. And that's frustrating, but it's pretty common. Number two, they're buying in the wrong location for that program. A program in Montgomery County does not help a buyer in Fairfax. DC programs don't help you for buying in PG County. And Virginia housing isn't going to help you for a Maryland purchase. Location really matters. Number three, the property does not qualify. A buyer must qualify, but the condo, the property type, the sales price limit, the occupancy, or the condition may not. Fourth, the lender doesn't offer the program. This is one of the biggest surprises. Not every lender is approved for every program. And even if the lender knows about the program, that doesn't mean they can originate it. Number five, funds run out. Some programs have limited funds and it's first come, first use. Some pause, some reopen, some change. That's why timing really matters. And number six, the buyer waited too long. If the program requires education, counseling, approval, reservation, extra underwriting, it may not work if you're already deep into a contract. This is why you do not want to shop first and figure out assistance later. That is backwards. So how down payment assistance can help? Well, down payment assistance works. When it works, it can be incredibly valuable. It can reduce the cash to close. It can help you buy sooner. It can help you preserve savings. And preserving savings is a big deal because buying a home is not the finish line. You still have to live in the home. You may need furniture, repairs, moving costs, a lawnmower, curtains, random Target runs that somehow become over $400. And if you have kids, apparently snacks. And now we're on a separate item of family budgets. So assistance can really help you buy and keep a stronger emergency fund. And that can be a very, very good thing. It also helps buyers who have good income but have not had enough time to save. And that's pretty common in the DMV. A teacher, a first responder, a government employee, a young professional, a family paying rent, childcare is incredibly expensive in our area, student loans. We all know someone who has them or we have them ourselves, and just regular life expenses. They may not be able to afford the monthly payment, but they may be able to afford the monthly payment, but the upfront cash is the barrier. And that's exactly where assistance programs can help. So, how down payment assistance programs can hurt or create problems. So, let's talk about the fine print now. Okay, down payment assistance is not always the best option. Sometimes the assistance comes with higher interest rates. Sometimes it creates a second mortgage. Sometimes that second mortgage has to be repaid when you sell or refinance. Sometimes it limits you and your future flexibility. Sometimes it can slow down the closing. Sometimes it can make the offer less attractive to the seller. Sometimes it limits the property type you can purchase. It can sometimes has income limits that are really tough in this area. And sometimes the program requires extra approvals that just don't fit into the contract's timelines. So sometimes the buyer is so focused on lowering their cash to close that they ignore the monthly payment and the long-term costs. And that is a mistake. You should never judge a mortgage strategy only on the amount of money that's needed at closing. Cash to close matters, but so does the monthly payment. So does the interest rate. So does the mortgage insurance, the repayment, and so does future refinance flexibility, and so does your long-term plan. So if you're planning on staying in the home for 2 years, a program that creates repayment triggers when you may sell may feel very different than if you had a plan stay for 10 years. If you want to refinance later, a second lien may matter. If you're buying a home in a competitive situation, a longer program timeline may matter. The money matters, but the terms matter more. So grants versus seller credit versus regular down payment loans. And here's one of the most important parts of the video. The down payment assistance is not the only way to reduce your cash to close. Sometimes a seller credit can be more flexible. Sometimes a 3% down conventional loan is better. Sometimes FHA is better. VA could be better, or sometimes the Maryland mortgage program is better. Sometimes county assistance is better, and sometimes the best strategy is combining all the options. And sometimes the best strategy is not using any assistance at all. This is where buyers need to do side-by-side comparisons, not just compare with grant versus without a grant. Compare option 1, a standard conventional loan, to option 2, FHA, to option 3, VA if you're eligible, to option 4, using a state housing program or county assistance, to option 6, seller credit strategy, and or assistance plus the seller credit if allowed. Then look at the cash to close, monthly payment, the rate, the mortgage insurance, second mortgage terms, repayment requirements, if there are any, how it impacts your closing timeline, your offer strength, your long-term flexibility. That's how you really make a smart decision, not by chasing the biggest headline number. So the biggest misconception is this: I qualified for the grant, so I'm good to go. Not quite. Qualifying for the program and successfully using the program are two different things. To successfully use down payment assistance, you need four things to line up. Okay. The buyer has to qualify, the property has to qualify, the loan has to qualify, and the timeline has to work. If one of these four things breaks, the program may not work. And that's why you need to figure out this well before you fall in love with the house. Because the worst time to learn about a program restrictions is after you're emotionally attached to the kitchen island. And I get it. The kitchen island matters. But in my opinion, financing matters more. So the questions every buyer should ask before using any down payment assistance programs, ask these questions. Is this a true grant? A forgivable loan, a deferred loan, or a second mortgage? Does it need to be repaid? If so, when does it need to be repaid? Does it have interest? Does it affect my mortgage rate? Does it affect my mortgage insurance? Does it have an equity share? Does it have income limits? And I'll list all of these other questions in the comment to this video. But don't be afraid to go through every single one with the lender, because those questions will tell you whether this program is a real opportunity or just a shiny headline, a marketing gimmick. So my advice for DMV buyers: if you are buying in Northern Virginia, Washington, D.C., or Maryland, here's what I do. Step one, I review these early, not after you find the house, really early. Step two, I would pick your target areas: Virginia, DC, Maryland. They may be all part of the DMV, but the assistance programs are not the same. Step three, compare your normal loan options first. Before chasing assistance, understand what the purchase looks like without it. 4, layer in the assistant options. Then see what actually improves your numbers. 5, involve your agent. The agent needs to know how the financing plan is going to impact how you write your offer. 6, confirm funds are still available. Don't assume the program is still available just because the website is still live. And then 7, look at the full cost. Cash to close is important, but it's only one thing. The best strategy is the one that helps you buy the home and still feel comfortable after closing. So, down payment assistance in the DMV, is it worth looking into? Absolutely yes. Are there real programs in the DMV area that can help buyers? Yes. But is it always free money? No. Is it always easy? No. Is it always the best option? No. Absolutely not. The right program can help you buy sooner, preserve savings, create a stronger path into homeownership. The wrong program can create delays, restrictions, higher costs, or future repayment surprises. So don't just ask what grants are available, ask what program actually fits my situation, because the grant is not the strategy. The strategy is using the right mortgage plan for your income, your savings, your location, your property type, your timeline, and your long-term goals. That is how you use down payment assistance the right way. So if you are buying in Northern Virginia, Washington, D.C., or Maryland, or anywhere in the DMV, start this conversation early. Do not wait until you're writing an offer to figure out whether assistance is available. And if this video helped, subscribe to The Mortgage Scene for some real-world mortgage advice without the confusing lender jargon, because buying in the DMV is already complicated enough. Your mortgage strategy should make it clearer, not harder.